Welcome everyone to Davos in the Desert Semiconductor Industry Conference. We're very pleased that you're joining us today. We will start off the program with a very interesting and informative presentation dealing with many different developments occurring in the semiconductor industry. My name, by the way, is David Wanatik. I'm the CEO of Davos in the Desert. So our first speaker, very pleased to welcome him back. He ran a fine podcast for us a little over a year ago, Mr. Tore Svanberg. Mr. Svanberg joined Stifel with the acquisition of Thomas Weisel Partners in 2010. Tore is a managing director in Stifel's technology group, covering semiconductors with a focus on analog, connectivity, and processor semiconductors. Tore has been an analyst for over 20 years and has been recognized for his work by the Wall Street Journal's Best on the Street Analyst Survey. Prior to joining Thomas Weisel Partners, Tore was a senior analyst and managing director of Piper Jaffray. He began his career as an analyst at Robertson Stephens. He has a very distinguished background, very successful background, but for purposes of just getting into the session, I'll stop with the introduction at this point and turn it over to Mr. Tore Svanberg. Tore?
Sorry.
Okay. All right. So I did the introduction. So feel free to proceed and enlighten us on breakthroughs in the semiconductor industry.
Great. Thank you, David. Thank you for having me, and Happy New Year to everyone. So as David mentioned, I've covered semis for 25 years now, and I would say this is probably the most interesting time that I've ever seen when it comes to those 25 years. I'm sure everyone's aware of what's happening in data center infrastructure and how AI is basically driven in a significant way by semiconductor technology. Now, I cover three subsegments of semiconductors, as David mentioned. It's analog, connectivity, and processors. And what's very interesting about those three is that they have very different dynamics. And I will go through some of those to explain what I mean by that. So David, next slide, please. So let me start, David, with the analog part of the industry. And what I'm showing here is the Stifel Analog Index that we share with investors. This is data over the last 25 years. And as you can see from the data, the Stifel Analog Index has actually significantly outperformed other technology indices, obviously the NASDAQ, but also obviously other important companies like Intel. And when I show this slide to investors, they are often quite surprised because they think, hey, why would analog be so important, and why would analog perform so well? Where we are increasingly living in the digital world. And what's very unique about analog is that analog basically represents the real world. Digital is still binary; it's still ones and zeros. But at the end of the day, the world, the real world, is still analog. Which means everything has to be converted back to analog for us humans to experience all the different digital technology that currently exists today. So I often think of analog as basically completely complementary to digital, because again, the more digital content and the more digital devices we develop, analog basically follows through. So analog is absolutely still a fundamental and very important part of the industry. Next slide, please. Now, what's very important to keep in mind when we talk about the analog part of the semiconductor industry is analog is very pervasive. So analog basically sells into everything from coffee machines to cars to smartphones to AI data centers. It's completely pervasive. So you'll find analog everywhere. That's the good news. The bad news is that also means analog is going to be very cyclical, because analog obviously is completely tied to the global economy. And what I'm showing you here in this chart is basically what we call the trend line analysis. So this is data that goes back again 25 years. The blue is basically analog billings on a monthly basis as published by the Semiconductor Industry Association. We then draw a trend line, through those billings. By the way, the slope of that trend line is about 7%, which is actually the average growth rate of the analog industry over that time period. And as you can see from this chart, we're never really on the trend line. We're either above it or we're below it. And those are the cycles. And you'll see the cycles here very clearly. So if you go back to the 2000 period, you have the dot-com bubble. You see it there. It goes up, it goes down. You look at that big sort of V-shaped cycle we had in 2007. That was the financial crisis when obviously things were very, very difficult for a few quarters, but then we also saw a very nice snapback. Even in 2017, you see the impact of the Trump tariffs. We sort of saw the supply chain building inventory ahead of Trump being elected as the first, at that time, the first presidency. And by the way, there's a lot of fears that now there could be something similar happening. But then, look at this sort of later era chart, just a straight line up. There you basically have the pandemic years. And what was very unique about the pandemic, of course, is that we went from having no availability of semiconductors because of supply chain issues to then obviously having overcapacity of semiconductors. So, by the way, there was a lot of pricing that also drove that straight line up. As you can tell, we've now corrected and we are slowly but surely moving back to the trend line. The one thing that I would say, and this is sort of the new paradigm that we talk about, is that to look at that blue line, it includes units and ASPs, or billings, if you will. And ASPs historically have been down about 3-4% on average over that 25-year period. We think going forward, pricing is going to be a bit more flattish as opposed to down 3 to 4. And the reason why has a lot to do with, again, the supply chain issues, global inflation, and obviously now also potentially some concerns around tariffs. Not to mention, there's also been a lot of consolidation in the equipment space. So from that perspective, pricing is just stickier now than what it has been historically. So next slide, please. So here you see that same exact data, but now I show you the actual units and the ASPs over that 25-year period. And as you can see there, we've had a very sort of steady increase in unit growth. It's about 10% over that 25 period. But then you've had that 3 to 4% decline in pricing every year, which then results in 7% billings or revenue growth, however you want to define it. But then you see the last couple of years, obviously we saw pricing moving up. During the pandemic years, we've now seen pricing roll over and coming back down. But as I mentioned before, the new paradigm for us is that pricing is going to be more flattish going forward, with units still growing about 10%. So what that means is that the underlying growth of the industry for analog has shifted from about 7% to about 10%. Next slide, please. And just to sort of finish it up on this particular topic, here I take things even further and now show you every year how units, ASPs, and billings did over that 25-year period. And what's very, very interesting is that, ASPs have been down for most of those years during that 25-year period, with the exception of 92 through 96, when ASPs were up every year. What happened in 92 through 96? That was beginning of the PC era. And that's why pricing was as strong as it was. You could potentially argue that now we are on this next wave, the AI era, that could potentially also further help pricing. But I put a red circle around 21, 22, 23. And why did I do that? Well, because during those 3 years, and keep in mind 21 and 22 were big sort of pandemic years, pricing was up 8% and 11% respectively. That is obviously not sustainable. That was heavily driven by global inflation, by the pandemic. 23 was a bit better. ASPs were only up about 4%. And then year to date, pricing is tracking to be down about 4%. But as we then look at 25, as I mentioned before, we are expecting pricing to be a bit more flattish. Next slide, please. So as I mentioned before, the analog industry is very diversified and basically serves every single part of the economy. And what I very often do is that I look at all my analog companies that I cover, and then I try and identify the various end market exposure that each company has. And what's very interesting about the analog industry is that the two biggest end markets are industrial and automotive. Combined, those are about 2/3 of the industry. But there are other markets here, including aerospace and defense. There's communications. There's obviously AI. There's consumer applications. And here you have a table where I show you all of the end markets that at least the companies that I cover have exposure to. Now, why is this important if you are an investor? Well, because right now, when you look at the semiconductor industry, we talk a lot about the haves and the have-nots. The haves are those companies that have exposure to AI infrastructure because that's the only area that is seeing quite a bit of strength right now. I think the only other area I would add would be aerospace and defense, although aerospace and defense is quite small in the bigger scheme of things. But all other markets, especially a lot of the cyclical markets like automotive, industrial, consumer, all those markets are weak, and they have been weak now for a very, very long time. So, as you look at stock performances over the last year or two, a lot of these AI infrastructure exposed names have done exceptionally well, whereas obviously the more cyclical names have definitely lagged. Next slide, please. The other really important thing to consider when you look at cyclicality is really understanding, where companies, are in relation to what the peak was in their last cycle. And so here I show you a table, where companies are on a percentage basis from peak to trough. And why is that important, especially this time around? Well, because over the last couple of years, we've seen what we call more of a rolling correction. So it was a correction that was more end market driven. It started in places like PCs and handset. Then eventually it moved into industrial. Then it moved into communications. And then obviously the last market to correct throughout all of last year was automotive. And that's why I think it's very important for us investors to look at, all right, well, have companies found the bottom? Have they already gone through the correction, or do they still have more to go? And that's why I showed this particular table and this particular data, because I think it's really informative to try and understand, where there's still some potential risk as far as downside is. Next slide, please. Now, I'm going to spend a bit more time on this particular slide because I think this is really important, especially right now. As a lot of you know, AI is the big, market now. I'm at CES. I don't think you can see a single demo here that doesn't, include the word AI in it. So, I mean, clearly AI is going to be the biggest driver of the economy over the next decade. What's great for semiconductors is that AI infrastructure and AI devices are driven by semiconductors. In fact, if you don't have semiconductor or strong hardware, you can forget AI, because obviously AI is severely compute driven. So obviously AI is an extremely important theme for the semiconductor industry. Let me just share a couple of data points with you. If you look at the 10 largest market cap companies in the world today, 3 of them are semiconductor companies. You got NVIDIA, you got Broadcom, and you got TSMC. So 3 of the 10 largest market companies in the world today are semiconductor companies. To take that further, the other 5, which are the hyperscalers, and I'll include Apple as sort of as a hyperscaler as well, they have their own semiconductor internal businesses. So now you're basically looking at, 8 out of the top 10 have their own, or they have some sort of semiconductor as part of their company's strategy. You add the 9th one, Tesla. Tesla also develops their own semiconductors now. So in fact, there's only one company that does not have semiconductors as part of their strategy among the top 10 largest companies in the world from a market cap perspective, and that's an oil company. And oil companies were typically not, have a lot of hardware or semiconductor technology embedded in their business models. But I think, that data point in itself, I think, just speaks to how exceptionally important semiconductor technology is. Now, Having said all of that, if you look at how to invest in this theme, there's basically three different ways of doing it when you look at my coverage. So there's processors, and here you have companies like I mentioned earlier, NVIDIA, you got AMD, you got Intel. I cover a small company called Unparalleled, which is more of an AI at the edge company. And by the way, a lot of that is quite obvious to people because obviously AI is driven by compute, and these are companies that develop compute-intensive processors, whether it's NVIDIA on the GPU side or Intel on the CPU side. I think what's less obvious to people is the connectivity part or the networking part. And here you have companies like Broadcom, Credo, Marvell, and then to a lesser extent, MACOM, MaxLinear, and Semtech. And what's very important about the networking part of AI infrastructure is that if you look at next generation AI infrastructure, and let's take Blackwell from NVIDIA as an example here, this has now become basically a cluster of systems. A cluster of systems means that you basically have to network them. So if you look at the Blackwell system by NVIDIA, the system itself, that rack, contains a tremendous amount of connectivity technology. But if you now want to connect those racks, and sometimes we're talking about thousands of racks being connected into one big cluster, that's going to need even more networking technology. So what's very interesting is that in 2023, NVIDIA was a great stock. In 2024, Broadcom emerged as a great stock. I'm now talking large caps, because people realized that, hey, it's not just about GPUs and high-end compute. This is now also a lot about networking technology. And by the way, some of these smaller players that I just mentioned, those stocks also did really well last year. So Marvell, for instance, that market cap basically almost doubled last year. Credo, that stock was up more than 300% last year. And these are basically more pure play companies on networking. The last part, which is again a little bit less obvious to people, is what we call power management. And power management is more analog technology. And power is obviously really important for these data centers because all the high-end compute itself means very power intensive systems. I'm sure a lot of you have heard about, do we have enough power? Do we have enough grid in various different countries to run these high-end AI data centers? And it is an issue. In fact, we've heard from a lot of supply chain companies that they're now building data centers in a region where the grid is perhaps stronger than in other regions. So, power is becoming paramount now as far as where companies are choosing to build these data centers. Are we at a point where we're going to run out of power this year? Probably not. But if these large language models continue to get as big as they are, at some point we are going to run out of grid power. And that's obviously extremely important. And the only way to solve that is, again, through semiconductor technology. And here I mentioned a few companies. The one company that I really, really like is a company called Monolithic Power Systems. The ticker is MPWR. And what's very interesting about them is that not only do they participate in power management from a power supply perspective, sort of addressing the total power consumption of the data center and the relationship with the grid, but they also do what we call board level power management. So that's making sure that a lot of these processors don't consume as much power and basically regulating a lot of that power so that you can basically lower the total power ownership per cluster. So this is a trend that all of last year was extremely important. A lot of these stocks did well, obviously, because of that. We think in 2025 we're going to continue to see networking names doing better than even processor names, because again, what NVIDIA did with Blackwell, now we're basically starting to see all the hyperscalers doing the same thing. And this is where I basically borrow the term that has been around for the last 30 years, which is that network is the computer. And when it comes to next generation AI infrastructure, I believe that 100% the network is the computer And that's why networking technology is so incredibly important here. Not just last year, also 25 and beyond. I basically add another set of AI type ideas here. And this is more when we think about the edge. So a lot of you here may realize today, AI is a lot about what's happening in the cloud. There's no doubt about that. That's obviously where all this data infrastructure is getting built. And that's going to be a strong cycle, I think, for the next couple of years. But I think where things get even more interesting is on AI at the edge. And I think this is going to be a 10-year trend. Now, the problem with the edge, of course, is that if you have these very power-intensive AI clusters or language models, you can't run them at the edge because obviously they require a lot of power. So obviously that is something that the industry is going to have to solve here over the next 10 years. Obviously, you can do a lot of training in the cloud, and then you can send it down to the edge. So that obviously helps from a power consumption perspective. But AI at the edge, I think we're in, basically the first inning. Very often, AI at the edge is synonymous or related to IoT because obviously IoT, which is a term that's been around now for the last decade or so, it's more about smart edge devices. Obviously, smart edge devices and AI at the edge mean pretty much the same thing. And here I basically to show you the companies that are very strong and capable in each of the subcategories. So in processors, you have companies like ADI, Microchip, NXP, Silicon Labs, and others. On the connectivity side, again, Silicon Labs, NXP, and then on the power management side, you've got companies like Texas Instruments, ADI, and so on and so forth. So think of AI today being primarily core cloud. That's where a lot of the excitement is. But think of the next 10 years, AI at the edge, really becoming a really important market. Next slide, please. I wanted to basically share this slide with you because when I recommend stocks to my clients, I'm always looking for companies that are able to add more and more value, incremental value every year. Because as I just showed you earlier, right? I mean, pricing tends to be down every year. Maybe pricing is going to be flat going forward. But, I think the really successful companies are the ones that are not just relying on cyclical pricing, but they're actually able to increase their ASPs consistently. And the only way you can do that is by adding and offering more value to your customers. And I show you here a company that has done this extremely well over the last 2 decades. It's a Monolithic Power Systems. So this is a power management company. And as you see here, they have grown at a CAGR of 23%. That is already more than 3 times higher than the industry, because as I mentioned before, the industry has grown about 7%. And the only way to do that is, again, by adding more value so that you can actually, raise your ASPs, every year. So, when I think about other stocks that I really like, that's what I'm looking for. I'm looking for companies that have the ability, the capability to add value, and therefore grow their ASPs every year, as opposed to, again, just sort of following the cyclical pricing that the industry typically sees. And I have identified 3 other companies here. So you have Analog Devices. They are definitely moving more up the food chain by offering more system solutions, trying to capture more of the platform. In Silicon Labs is another company that's at the edge, IoT at the edge. They're also doing something similar by adding more and more functionality, more and more content, whether it's processors, whether it's sensors, whether it's connectivity. And then lastly, a smaller company called SiTime, which is also doing the same thing in the timing space or the timing subsectors of the industry. So this is a really important point for me because at the end of the day, companies that are able to grow organically by adding more value are certainly the stocks that are going to outperform everybody else. Next slide, please. So I'm going to wrap up with this slide. And this is something that we basically published about a year ago now. These were 2024 top 10 trends. Some of them are very specific to AI. Some of them are more specific to the cyclical part of the industry. But look at the first trend that we mentioned, rise of AI servers. I mean, did that play out in 2024? Yes, in spades, right? I mean, 2024 was the year of AI servers. There's no doubt about that. But then more importantly, as I mentioned before, AI networking also was an exceptionally important trend in 2024. With that came the 800 gig upgrade cycle for optical interconnects. AI PCs, we did identify as a trend. I think that was a bit of a disappointment. We certainly didn't see a PC refresh cycle in 2024 because of AI. I mean, people thought that sort of an AI co-pilot button, would be a reason to upgrade their PCs, and obviously that was not the case. Maybe 2025 could be a better upgrade cycle in PCs because of AI. Certainly here at CES, there's a lot of demos and sort of an attempt at that. I personally think the smartphone is a better device for AI from a sort of edge perspective than the PC. It's very difficult to walk around with a laptop or a PC, to fully embrace and utilize AI, whereas that smartphone form factor, I think, makes much more sense. The smart edge, certainly saw some beginnings of AI, but still fairly low penetration. We're definitely expecting much more here in 2025. And then on the cyclical side of the top 10 trends, we did obviously throughout the year discuss the semiconductor correction and the recovery. I would say the correction is pretty much complete. That's the good news. The bad news is that the recovery has been very soft. It's been very weak. That has a lot to do with obviously soft PMI numbers globally. As a lot of the European economy has been very sluggish. The North American economy has been better, but the industrial part of the economy has actually not been that great. Obviously, this has a lot of correlation with high interest rates and so on and so forth. Hopefully, now that rates are coming down, that should improve for 2025. And then onshoring, of course, was a really, really big topic in 24, where because of geopolitical tensions between the US and China, with Taiwan sort of in the mix, there's been this drive to doing more and more manufacturing onshore in North America. That trend started in 2024 and will probably continue. And then lastly, I'll point out GaN and silicon carbide. These are two next generation power management technologies that could continue to gain a lot of traction at the expense of silicon, just simply because the world is moving more and more towards higher power, whether it's EVs, whether it's data centers, whether it's alternative energy. They all require significantly higher power. And that's where new technologies like GaN and silicon carbide are really starting to penetrate the market. Next slide, please. So that's basically what I had to share today. This is my team. We publish a lot, and there's only 3 of us. So I'm sure, as you can imagine, we're exceptionally busy. We publish white papers. We publish weeklies, including AI weeklies, including our Analog Alchemy. And then obviously we publish a lot on all the various semiconductor companies that we cover from a financial analysis perspective. So with that, David, that's all I had to share today.
For that very interesting presentation. If you have a few minutes, can you entertain a couple of questions?
Absolutely, David. We'd be happy to.
All right. So if you have questions, there's a chat bar to the right side of your screen, or you can also raise the hand icon and we can take a few questions. A couple questions came in. Do you think there's any risk that AI could be a bubble and the bubble can burst? And if that were to happen, which semiconductor companies would be most vulnerable to an AI bubble bursting?
Right. It's a great question, and it's a question that I get a lot from investors, obviously, because a lot of these AI stocks have done very well, and of course everyone's worried about the potential bubble. I don't really think about it that way. I think that today you're seeing a tremendous amount of capex being allocated to AI. because AI is extremely important. It's going to basically touch all industries. I mean, there's not a single industry application in the world today that is not going to be impacted by AI. The second point is that AI is expensive. These high-end processors are extremely expensive. So this is not just about, hey, I want to invest in AI because it's going to be an important part of my business model. No, I mean, I'm going to have to pay up for it because it's really, really expensive. So I understand the question because, you know, the sheer size of the numbers are massive and they're huge. But I also think that's because it has a lot to do with the cost and how incredibly difficult it is to build these large language models, right? I mean, we're talking about tens of thousands of GPU clusters moving to hundreds of thousands. And there's people even talking about 1 million GPU clusters, right? And to put things in perspective, this year, there's probably going to be about 10 million, what we call XPUs, you know, shipped in the marketplace. And the ASPs there are pretty high, right? So like this is an expensive undertaking. Now, David, are we going to go through periods of some slowing or digestion or what have you? Absolutely. You know, I've been around long enough and I've covered the technology sector long enough to understand that this is not a nice linear curve or a cycle, right? I mean, you are going to have your ups and downs, but you know, I think of the next 10 years, AI is going to be explosive. As I mentioned earlier, right now, AI is happening mainly at the core. We haven't even seen it yet in any meaningful way at the edge. I think of the next 10 years, we will. As far as all this CapEx at the core, are we going to see some volatility there, some cyclicality there? Absolutely. When that is, that's the million-dollar question. If I knew that, David, I probably wouldn't be doing this call today. But you know, some people have talked about 2026 maybe seeing a bit of a digestion. But based on everything that we've heard and based on everything that we've seen in the supply chain, 2025 is still going to be a very, very strong AI CapEx year. I'm sure a lot of you have seen the CapEx numbers from the big hyperscalers. Those continue to grind higher. But yeah, if we were to see a potential slowdown, maybe 2026, but it's still too early to say.
Okay, so kind of combining a couple of questions here. With the reshoring effort and so forth, is there enough human capacity, human talent to do all the semiconductor work that may come back to U.S. shores? And then somewhat of a connected question, but not really. I've heard several years ago that the Saudi Arabian government was going to make a big push into semiconductors. And then more recently, about 6 months ago, I learned that one of the Indian states has a huge program, supposedly, to get very active in subsidizing the development of fabs and so forth. So anyway, kind of a couple random questions in there if you want to respond.
Yeah, no, let me start with the first part of the question. So, I mean, it's not something that I worry about. This aspect of, is there enough human capital, to continue to drive this AI revolution? And the reason I'm saying that is because what's interesting about AI is that, not only is AI driving new applications, but AI is also becoming a productivity tool for humans to be more efficient. AI in itself is actually helping manufacturing plants become more efficient, deliver better output, and so on and so forth. So, if anything, this, AI is actually going to be what helps that aspect of human capital. Now, if we think about like where's the manufacturing going to be regionally, that's where I do see some issues, right? Because as we all know, the U.S. has not been investing in manufacturing for the last 3 decades, and now it's starting again. Getting fully up ramped is going to take a long time, right? So when people say, onshoring, yeah, that means like something is going to be manufactured in the United States, and we're not going to have to rely on places like Taiwan, Japan, Korea anymore. No, that is not the case, right? I mean, TSMC in Taiwan is going to be absolutely critical for the next 3 to 5 years because again, doing manufacturing in the United States or in the Western world, it's going to take a long time to sort of get that ramped up. To answer your other part of the question about, Saudi Arabia, India, and so on and so forth, yeah, I mean, look, AI is critical, right? And AI today is being driven by who? It's being driven by the hyperscalers. They are the ones that have the scale to invest in this stuff. So when you think about sovereign nations, like in the Middle East, I mean, do they want to run everything on AWS? Do they want to run anything with Microsoft? No, I mean, they want to build a lot of their own systems, right? So, they want to have more ownership of AI systems. They obviously preferably want to have ownership of the hardware, including semiconductors as well. I think in relation to your India question, I think that's more sort of a longer term investment cycle, right? So, I mean, we all know that, for instance, China, they started investing in semiconductors from a government perspective already 25 years ago. And that's been an ongoing process. I think the Indian government is very similar to that, perhaps starting quite a bit later, right? But I also think India is seeing this as an opportunity, especially the political turmoil between the U.S. and China, right? So I mean, I think India sees this as a great opportunity for them to maybe ally with both regions and become a manufacturing hub, and certainly also become a better at semiconductor manufacturing.
Okay. And then the last question, we can do this quickly. Any technical choke points that you see? Some people have been talking about interconnects and the connection between transistors, needing to become extremely small and difficulty therefrom. Any technical choke points you want to address?
There's always technical choke points, David, in the semiconductor industry or the hardware industry. You can never have good enough hardware. You can never have efficient enough hardware. But if I could sort of categorize them in sort of bigger buckets, I mentioned some of this earlier, right? Power is an issue, right? These AI clusters, they use a lot of power. So there's choke points there. Are we going to run out of grid, right? I mean, these are big fundamental questions. People have talked about using nuclear plants to run the electricity to these data centers. I don't believe in that. I don't think nuclear is the solution. So that means semiconductor technology is going to have to figure it out. And there's a lot of choke points there, and a lot of my companies are very, very busy and very, very active trying to solve a lot of these issues. Networking, you're right, that's an issue too. I mean, you look at a system like NVIDIA's Blackwell. To me, it's a piece of art as far as how much interconnects and networking that has. But it's complicated. It's difficult. It's got a lot of copper. It's got a lot of optical. At the speeds things are going, that's not going to be sustainable. So even on the interconnect side, there's a lot of innovation going on right now. And I'm on the private company front. I'm seeing sort of a renaissance of semiconductor development. Of the last 20 years, I hadn't seen a lot of it, but the last couple of years, I would say innovation in semiconductor industry has been, significantly more important on the private company side.
Okay, well, great. Thank you very much, Tori Svanberg, for speaking to us. As always, that was an excellent presentation, very informative, and thank you for addressing these issues and answering our questions.
Yeah, thank you, David, and I apologize about the technical issues that I had at the beginning of the call.
No problem.
Yeah,
No problem
thank you,
all.
and thank you. Have a very good day. Take care.
You too. Okay, thank you.